Welcome back to the deep dive. Today, we are taking a fascinating trip, really, right into the heart of Latin American finance. We're going to unpack one of the most explosive and successful transformations in the fintech world, the rise of Nubank. And our mission today, it isn't just to tell a cool success story. We really want to get into the mechanics of massive disruption. You know, how did one seemingly simple digital startup manage to challenge one of the globe's most concentrated, most entrenched, and I think crucially most frustrating banking sectors, the one in Brazil? To do that, we actually have to go back to the early 2010s to really get a feel for the monumental customer pain point that was like the fuel for this whole revolution.
And that pain point is,
Yeah.
it's everything. It is the absolute foundation of the story. To really grasp the scale of the opportunity Nubank saw, you have to understand just how concentrated the Brazilian market was. In the early 2010s, the source material shows us it was basically 5 major banks. They held a near total oligopoly. And this wasn't, healthy competition. This was an environment where having so little choice translated directly into institutional power. So what that meant for the average person was a system designed almost entirely for the bank's profit margins. It led to incredibly high barriers, pretty much no competition, and just slow, burdensome innovation.
Okay, so let's get granular on that. Let's talk about the friction this created for everyday people. Because the situation was, it was truly punitive. If you were a customer at one of these banks, you were paying fees for the most basic things. We're talking monthly account maintenance fees, like just for the privilege of having your money there. A concept that seems, well, bizarre in most competitive markets today. And then if you needed credit, the situation got exponentially worse. The sources are pretty clear that the average revolving credit card interest rates were consistently in the triple digits. We're talking sometimes over 300% a year. It just made credit a financial trap, not a tool. And beyond the sheer cost, there was just the experience itself. Banking was a bureaucratic nightmare. You're waiting in long lines, you're dealing with mountains of paperwork, and often if you lived outside a big city like São Paulo or Rio, good luck. Accessibility was incredibly limited. It was basically a tax on just participating in the modern economy.
What's so fascinating here is that this specific kind of exploitation, paying high fees for terrible service, it doesn't just create annoyance. It creates this deep, deep-seated mistrust. And when the fundamental purpose of an industry becomes profit extraction instead of customer service, that system becomes profoundly vulnerable. And you have to see, the legacy banks were shielded by 2 things. First, regulatory barriers that made it incredibly hard for anyone new to even get started. And second, the massive, massive cost of building out a physical branch network. The cost structure was so high, built on expensive real estate and all this overhead, that they needed those fees and those insane interest rates just to stay profitable. They would essentially price their own customers right in the arms of a disruptor.
That context is just, it's everything. Because right into that vacuum, in 2013, Step 3 founders, you have David Vélez from Colombia, Cristina Junqueira from Brazil, and Edward Wingle from the US, and they just looked at the system and decided to tackle it head on. Their whole philosophy, what they built the entire company on, was so simple, but for that time and place, radical. It was fight complexity and empower the customer. They were just asking, why does banking have to feel like a trip to the DMV? Why can't it be digital, transparent, free of all those hidden charges, and just fundamentally centered on solving your problem, not creating new ones?
And this brings up a huge strategic question, right? How do you fight that kind of institutional complexity when the big players have all the money, all the political connections? You bypass their entire physical model. The founders understood that the physical branch was the ultimate symbol of that complexity, the waiting, the paper, the opaque manager's office. So by committing to being 100% digital from day one, they immediately cut out all that bureaucracy and signaled total transparency. They weren't just positioning themselves as a better bank, they were the anti-bank, a direct ideological challenge to the old way of doing things.
And their entry into the market was like pure performance art. While everyone else was focused on physical branches, Nubank launched with 0. Not a single one. They were an app before they were anything else. Their first product, which came out a year later, was that now iconic purple credit card. And it was revolutionary. Not just because of the color, but functionally. It was managed entirely through this clean, beautiful, intuitive mobile app. Just compare the experience. The legacy bank made you physically go in, fill out dozens of pages, and then wait weeks for a decision. With Nubank, you could apply online in minutes. No paper. You could manage your spending in real time, instantly lock or unlock your card with a tap, and if you needed help. Their customer service was famously friendly and human. It was designed to solve problems quickly, not send you to another department.
But the no annual fee proposition, that was the real bomb they dropped on the market. In a country where you expected to pay for literally every single interaction, offering a premium credit card with zero annual fees just completely broke the existing profit model. So if you connect this to the bigger picture, you see that Nubank wasn't just selling a credit card, they were selling rebellion, that signature purple color. It became a symbol of a new era. It distinguished you as someone who was just fed up with the gray, intimidating, fee-heavy world of old finance. Their obsession with that immediate customer experience, the seamless onboarding, the clarity of the app, it created instant trust where basically none had existed before.
And that trust, it translated directly into explosive organic growth. The sources make it really clear they didn't rely on huge, expensive ad campaigns like the big five banks did. No. Instead, they focused on referrals. Their customers became genuine brand evangelists. You'd see them proudly sharing photos of their purple cards on Instagram, telling all their friends to sign up. And that kind of organic endorsement is just the highest validation you can get in a low-trust environment. But I want to pivot here because the simplicity the customer saw on the outside required immense complexity on the inside. We talk a lot about the sleek app, but what was happening under the hood? What allowed them to move so fast while the legacy players were just stuck?
That's the real deep dive moment. Because while the traditional banks were running on these decades-old core banking systems, often based on languages like COBOL, that took years and millions of dollars to update, Nubank built their entire infrastructure from scratch in the cloud. They operated on modern modular APIs. Think of it like this. If a traditional bank wanted to launch a new feature, they had to untangle this giant, complex knot of old systems. That process could take 18 months. Nubank, on the other hand, could launch a minimum viable product, test it, iterate on it, and roll it out globally in a matter of weeks. Their whole architecture was designed for speed and flexibility. They weren't carrying all that weight of legacy investment.
And that technological edge is what allowed them to tackle one of the biggest systemic problems in Latin America: financial inclusion. The traditional banks demanded a long credit history, in-person verification, endless paperwork, all things that immediately disqualified millions of working Brazilians from even getting access to formal finance.
Precisely. And this is where their use of technology became socially transformative. Nubank couldn't just rely on traditional credit scores because the very population they were targeting, the underserved, they didn't have them. So they pioneered using alternative data for their credit decisions. And this is a really critical technical point. They looked beyond just formal employment records or previous bank statements. They used modern data science to assess risk based on factors like geolocation data, what kind of device you're using, bill payment patterns, and sometimes even your digital footprint. All of it analyzed in real time. And this let them approve and responsibly underwrite credit for millions of people who had been systematically shut out by the old guard. They were creating entirely new customers, not just stealing them.
So by 2017, the model was so powerful that they expanded beyond just the credit card. They launched Nuconta, their full digital bank account. And again, the crucial feature: no monthly fees. This was the moment Nubank really evolved from being a single product disruptor into a fully integrated financial services platform. Nuconta let you pay bills, transfer money instantly, often for free, and manage all of your finances right there in the app. It solidified their role as the primary financial hub for millions of people, and it just drastically expanded their total addressable market.
And this rapid scaling didn't stop at Brazil's borders. They recognized that the pain points of banking, the high fees, the low trust, the slow service, that was a continental problem. So they expanded aggressively into Mexico and Colombia. They replicated their core philosophy, emphasizing transparent pricing and really fast onboarding, and they adapted it to the local regulatory hurdles. For instance, in Mexico, where big international banks had a huge market share, Nubank still managed to get significant penetration just by providing a superior, localized customer experience.
And their explosive trajectory definitely caught the eye of global finance. They attracted major international backing: Sequoia Capital, Tencent, but the most symbolic endorsement really came from Warren Buffett's Berkshire Hathaway. For you listening, this is a huge signal. Buffett is famously conservative. He invests in railroads, energy, tangible assets. So his decision to invest billions into a branchless, purple-branded tech company, a FinTech, was a massive public endorsement that this digital shift wasn't just a fad. It was the future of money globally. It was the old guard validating the insurgents.
And the true peak of that validation came in late 2021 when Nubank went public on the New York Stock Exchange. Its valuation, even in early trading, it briefly peaked above $40 billion. Think about that. A bank that was founded less than a decade earlier, with no physical branches, was briefly valued higher than several of the century-old legacy banks it set out to dismantle. What that all means, ultimately, is that the customer vote was cast. They chose simplicity, they chose transparency, and they chose digital speed over physical presence and bureaucracy. Innovation had formally outpaced tradition across Latin America, and it completely reshaped the financial landscape.
Today, Nubank serves over 90 million customers. It's a testament to the idea that technology and empathy, a real focus on fixing the customer's actual problem, can coexist so powerfully in financial innovation. So if we look back at this incredible journey, I think the key takeaways for you are pretty clear. Deep-rooted, highly profitable industries are incredibly vulnerable to disruption if they neglect that core customer experience. Nubank just proves that you can build massive trust and scale incredibly fast by getting rid of unnecessary fees and bureaucratic complexity, and by using strong human-centered branding as your armor.
And that leads to a final provocative thought for you to consider. Nubank's success forced the incumbent banks to react. They had to get rid of many of their account fees. They had to simplify their own digital offerings just to survive. So now that the bar for customer expectation has been permanently raised across Latin America, and really globally, as every bank now has to offer digital excellence, what's the next essential financial service, or maybe the next core banking function, that a startup applying those exact same principles of transparency, speed, and no-fee simplicity will successfully target and democratize?